You just released a report, and it kind of goes against the grain of some of the conversations I've had with energy ministers, including of Saudi Arabia, where the argument is that banning oil exports or an SPR release, either one wouldn't make much of a difference.
Well, I think, I'm not sure it goes against the grain exactly, but it certainly goes against the grain of the discussion in the United States. 11 senators have written a letter to Biden saying you should ban U.S. oil exports. The U.S. exports 3 million barrels a day. If you took 3 million barrels a day out of the global market, you would create a price shock. Other countries would be scrambling for supplies, and it would end up not bringing gasoline prices down, which is the political objective of the Biden administration, but would send gasoline prices up and would contribute to this general global supply chain disruption we're having. So, what seems to be, oh, this is the way we solve the problem, would make it worse.
We heard from the U.S. Energy Secretary over the last 24 hours, and she said that all options are on the table, including the SPR release. When you look at U.S. energy policy, sort of from a bigger picture perspective, how would you characterize it?
Well, I think the thing that's been left out of the discussion, we had the administration asking OPEC Plus for more oil, and even here in Abu Dhabi, I hear the various ministers say, well, isn't the United States the world's largest producer of oil? Why are they asking us for more oil when they have more oil? I think the SPR is probably, we've seen that in, it's been used politically before. We saw it used when Al Gore was running for president. So that's probably the thing to do. It would have some minor impact, but it doesn't resolve the basic question, the tightness in the global market. There are a lot of other ideas on the table, like banning crude oil exports, which would make the situation worse and would mean higher gasoline prices for Americans. But I think the administration is going down a list and of all the things, but there are not that many things that they can do.
OPEC Plus made it very clear, at least individually, when we had the conversations with members throughout the conference, 400,000 barrels a day of additional supply on a monthly basis. They're staying the course. There's no need to put additional barrels into this market. Is that a view that you can get on board with?
Well, it's not, I wouldn't endorse a view like that. I think I understand their logic, which is that 23 nations trying to hold it together, and if you start manipulating it, and they look again at the United States and say, there are a lot of other things the U.S. is doing. There's a lot of oil that's sanctioned, not that you should release the sanctions, and they're just saying, wait, you have oil, why aren't you addressing your own domestic oil industry before you're coming to us? They just don't understand. Basically, they don't understand it.
As we look ahead to 2022, I was reading a note from UBS coming into the conference this morning, and they upgraded their Brent crude forecast to $81 a barrel. They see a real risk of a supply shortfall. Is that what you're seeing in the data as well?
Well, we're using for 2022 at this point, and of course price forecast change, we're using around $77. We're seeing definitely, it's a tight market. We see the spare capacity shrinking, and if you have decent global growth, you're going to have a big call on oil. If jet fuel starts to come back, people start going on airplanes again, that tightens the market. That's 3.5 barrels a day. So I think people are having the sense that there is that risk there, that this is separate from the natural gas and the coal problems and the slow wind speeds that have bedeviled Europe.